introduced in India, and what are the key challenges which the company have to face while migrating from the Indian GAAP accounts to the Ind AS accounts. And in this video and the session, we are also going to understand what is the roadmap of Ind AS, whether the roadmap is applicable to all the companies, whether the roadmap is applicable to all the NBFCs in the banks, whether the roadmap is applicable to insurance companies, and whether and what are the areas and what are the entities where the Ind AS is not applicable currently. Right, then we are going to discuss the Ind AS net worth criteria, that what is the net worth criteria that we need to look in order to ensure that the Ind AS is applicable to a company. Right, so apart from this, we are also going to discuss in respect of some sort of the gap difference or the structural changes in respect of the balance sheet, P&L, and OCI. Right, so with this brief background, let's understand what the Ind AS is. Right, so first of all, when we have migrated Ind AS in India, right, 1617 was the first accounting period in which we have migrated in India from Indian GAAP to Ind AS. Right, in the very next year, ICA has issued a publication in which they have evaluated what is the impact of Ind AS across the companies in Indian scenario, and they have evaluated that around 73,000 crores. The impact on the net worth was around 73,000 crores. That means the net worth of the company have increased by 73,000 crores for the phase one entities. It's a big number. Right, so net worth have gone increase of the Indian corporates who falls in the phase one category. Right, apart from that, out of this 73,000 crores, 83,000 crores pertains to PPE. Right, in the 73,000 crores, there are certain standards which has resulted into increase in the net worth of the companies, as well as there are certain standard which has resulted into the decline in the net worth of the company. Right, so in respect of, or out of the 73,000 crores, 83,000 crores pertains to the PPE. That means the net worth of the entities have gone up by 83,000 crores because of the PPE standard. Right, net worth of the companies have increased by 47,000 crores because of the financial instrument standard. Right, so these are the couple of the standards which have made their presence in the market. Right, so these are the very critical standard, and you can imagine then because of the introduction of Ind AS in India, it has resulted only on the phase one companies by 73,000 crores. The net worth has gone up so much, big numbers. Right, so it is very critical. It is very important to understand the nitty-gritties of Ind AS. Right, because it can improve the net worth of the company, it can decrease the net worth of the company. Right, so with this basic background of about Ind AS, let's understand what Ind AS is. So first of all, the full form of Ind AS is very simple: Indian Accounting Standards. What is the full form? Indian Accounting Standards. So Ind AS are the set of the accounting standard which have been issued by Ministry of Corporate Affairs, MCA, after having a consultation with the NACAS and after having a consultation of ICAI. So after that, MC or the Ministry of Corporate Affairs have issued these standards in India. Right, so there are the two important sections under Companies Act. Two important section under Companies Act, due to which every company prepares its financial statement. One is section 129 and the second one is section 133 of Companies Act. Section 129, what is section 129? Section 129 mandates a company to prepare its financial statement. That means if there is a company which has been incorporated in India, right, that company has to prepare its financial statement mandatorily as per the requirement of section 129 of Companies Act. And if that company is either having a subsidiary, JV, associate, then that company is also required to prepare its consolidated financial statement as well. Right, and as per which law and as per which standard? So section 129 empowers the central government that they can issue, or the company they basically mandate the company to prepare their financial statement as per the accounting standard issued by the MCA as per section 133. So section 133 empowers the MCA that they can issue the accounting standard, they can issue the Indian accounting standard, right, in consultation with ICAI and NACAS. So that is why MCA has issued the accounting standards, which is erstwhile Indian GAAP, right, and MCA has also issued Ind AS in consultation with the NACAS and ICAI. So as of now, there are two gaps which are applicable in India. One is the Indian gap and the second one is the Indian accounting standard. Right. So in a nutshell, what is Ind AS? Ind AS are the set of the accounting principles, set of the accounting standards which have been issued by MCA in consultation with ICI and NACAS. And every company who is adopting Ind AS and every company who is mandatorily applying Ind AS, they have to prepare their financial statement mandatorily as per the Ind AS standards which have been issued by MCA. Right, guys? Okay. So Ind AS, in India, we are also saying that Ind AS are the converged IFRS. Right? In India, we are also saying that Ind AS are nothing but a converged IFRS. Why we are saying so? Okay. So whenever a country is adopting any IFRS standards, any means any entire IFRS standard or the IAS standards which have been issued by the ISB. ISB stands for the International Accounting Standard Board. So whenever any country, I'm not talking about a company, I'm talking about a country. Whenever any country is going to adopt the IFRS standards, right, then two routes are available to a country. What are those two routes? One is the adoption route and second one is the convergence route, right? Let's understand how many routes are available. Two routes are available. One is the adoption route. First one is the adoption route and the second one is the convergence route. Convergence route, right? Now we need to understand what is the adoption route and we need to also understand what is the convergence route, right? So adoption route means that all the IFRS adoption of all IFRS as it is without making any changes, right? Adoption route means that if the entire IFRS have been adopted by that particular country as it is without making any changes, then it is called an adoption route, right? That means a country is adopting all the IFRS, all the international accounting standard issued by the ISB as it is in that particular country without making any changes, right? So in this scenario, the IFRS adopted by that country will be equivalent or will be equal or will be a replica of the ISB issued IFRS standards, right? But what is a convergence route? Convergence route means all IFRS, and IS standards, right? Plus or minus certain changes, right? These changes are called carve-outs or carve-in. This is called a convergence route. In the convergence route, the country will adopt all the IFRS standards and the IS standard which have been issued by the ISB plus or minus certain changes, and those changes are called carve out and carve in, right? What is the meaning of carve out and what is the meaning of carve in? That means in India, what we have done, we have adopted or we have taken a convergence route. We have not taken the adoption route. We have not taken in India the adoption route. We have taken the convergence route. That means we have taken all the IFRS standards which have been issued by the ISB. We have made certain changes in those certain standards as per the requirement of India, right? We have made those changes as per the requirement of Indian scenario, right? Those changes are called carve outs and carve in. What is the meaning of carve out and what is the meaning of carve in? Carve out, as we simply understand that something was there, the some guidance was there under IFRS or IS that we have taken out because that is not relevant from the Indian scenario. And what is carve in? Carve in means that there are certain guidance which was not there, a concept which was not there under IFRS standard, but in Indian scenario that is more relevant, and therefore we have included the additional guidance in those IFRS standard, that is called carve in. What is the best example of carve in? The common control transaction. common control transaction. It is a kind of a business combination under Ind AS 103. Ind AS 103, right? So this guidance does not exist under IFRS, but in Indian scenario, we have embedded this guidance as a part of the appendix of Ind AS 103. This is a case of carve in, right? What is a case of carve out? Carve out means, for example, breach of contract, breach of covenants of covenant of loan contract, right? This can be the example, and this can be the example of carve in, right? Breach of covenant of a loan contract. What does it mean? It means under IFRS, there is a guidance that if the borrower has defaulted in the repayment of loan, if the borrower has defaulted in respect of the covenant of the loan contract, right? Covenant means different terms and condition of the loan contracts. If the borrower has defaulted in the covenant of a loan contract, due to which the long-term loan has become a short-term loan, the long-term loan is become a repayable on demand to the lenders or to the banks, then in that case such long-term loan shall be required to be recognized as a short-term loan, right? But in Indian scenario, what we have said that this is very basics in India, right? This keeps on happening, so there is no need to present this as a long term loan, right? There is no need to present this like as a short term loan. So what we have embedded in that, we have said, we have made certain changes in that language, and what we have said that if the company or if the borrower has taken a long term loan and there is a breach of the loan, breach of the covenant of the long term loan, but that breach has been, and due to that breach the loan has become repayable on demand, right? But the lender, before the approval of the financial statement of that particular year, has agreed not to demand that money. In that case, this long-term loan will be continue to be recognized as a long-term and will not be recognized as a short-term loan in the books of accounts, right? So there are the there are the multiple carve-outs exist in different standards that we need to understand, right? This is a small example of carve out. This is a small example of common control transaction, the guidance of which we have included under Ind AS 103, right? So coming back to Ind AS, what is Ind AS? Ind AS are the set of the accounting principles, set of the accounting standards which have been issued by MCA in consultation with the CAS, in consultation with ICI, right? But have included certain changes, right? What are those changes? Certain changes are called carve outs and carve in, right? That is the reason why we are saying the Ind AS are nothing but a converged IFRS, because we have taken the base of the IFRS standard, IAS standard, which have been issued by ISB, and made certain changes which is relevant to the Indian scenario, right guys? So this is the brief understanding of Ind AS, right? Ind AS are numbered in the same way in which IFRS or IAS have been numbered. We will also understand how they are structured, right? As of now, how many standards we are having under Ind AS, right? Let's understand that as well. After that, we will go through what is the roadmap of the applicability of Ind AS in Indian scenario. Okay, guys. So let's see how many standards are available under Ind AS or applicable as of today under Ind AS, right? So when Ind AS have been issued, right? 31st March 17 was the first period. Number of Ind AS, right? Ind AS issued Ind AS issued till 31st March 2018, right? 31st March 2018, we were having 40 Ind AS accounting standards, right? Subsequent to which Ind AS 115 issued, right? This is applicable from 1st April 2018, right? So because of the introduction of the new standard, two standard has gone away, which is Ind AS 18 and Ind AS 11. Both these standards pertains to revenue recognition, right? So one has come up and two has gone. So that means we were having 39 accounting standard till 31st March 2019. Till 31st March 2019, we were having 39 accounting standards. But subsequent to that, what has happened? One more standard have been issued, Ind AS 116, which is a leasing standard, right? One more standard have been issued. But subsequent to that, or the consequential impact of issuance of the Ind AS 116, one standard had to go. Which one that standard is? Ind AS 17, old lease standard, had to go. And after this, we were having 39 accounting standard till date, right? So how many accounting standard we are having till date? We are having 39 accounting standard applicable today, right? So till 31st March 2019 or 2018, we were having 40 accounting standard. Subsequent to that, one standard have been issued and two standard has gone away. That means till 31st March 2019, we were having 39 accounting standards. But subsequent to that, from 1st April 2019, right? From which date? 1st April 2019, Ind AS 116 have been issued, which is a leasing standard. So that means one more standard has come up, but due to the consequential impact of that, we had to lose one standard on account of old leasing accounting standard. So after that, we are having 39 accounting standard as of that date, right? So how many standards we are have available today? 39 accounting standard which are applicable in the today's world, in the Indian scenario, right? So recently what has happened, ISB has issued IFRS 17, which is the insurance standard, which is the insurance related standard, which are only applicable in case of the insurance companies, right? Similarly, we have also issued Ind AS 117, which is under a draft stage, where the exposure draft has been issued by the ICI. That standard has not been implemented or issued, or I would say the draft has not been finalized till now. That is under the exposure stage, right? If that standard has come up in the future, then again we will have one more standard in this scenario, right? And it may possible that we have already a standard which is Ind AS 104 that has to go up, right? So going forward, 39, the total number of the standard will continue to be maintained till 39 only, right? But that standard, that Ind AS 117, has not been made mandatorily applicable in India because that is still under the draft stage. So this is the entire flow chart, or this is the entire summary of how many standards we are having in India, right? In respect of Ind AS, right? So all the Ind AS have been numbered, or all the Ind AS have been serial numbered in a same way in which we are having a IFRS standards, right? For example, let me write here, right? For example, we are having IFRS 1, right? Similarly, we are having Ind AS 101, IFRS 2. Similarly, we are having Ind AS 102. Under IFRS, we are having IFRS 3. Similarly, we are having Ind AS 103, IFRS 4, IFRS 5, IFRS 6. Similarly, we are having Ind AS 104, Ind AS 105, Ind AS 106, right? And this keeps on moving till IFRS 16. And similarly, this keeps on moving Ind AS 116, right? So this is in respect of the IFRS standard, right? Let me rub this and let me write the sequence or the series of IA standard. Okay. In respect of IS, we are having IS 1. Under Ind AS, we are having Ind AS 1. Under IS, we are having IS 2. Under Ind AS, we are having IS 2. IS 7. Similarly, we are having IS 7. Ind AS 7. Right? So certain standard like IS 3, IS 4, IS 5, those have already been withdrawn by ISB way back, right? So there is no point of issuing those standard in Indian scenario, right? Similarly, we are having till IS 41, right? But certain standards have been withdrawn in between. Certain standards have been withdrawn, right? And similarly, we are having Ind AS 41, right? That is why we are saying all the Ind AS are sequentially are prepared in the same fashion in which we have the IS and the IFRS standard. Certain people ask me, sir, what is the difference between IS standard and IFRS standard? Actually, there is no difference. There is no difference between these two standards. Earlier, we used to have ISB board, which is International Accounting Standard Board. They used to issue IS, which is International Accounting Standard. Subsequently, that board has been changed. The board has been restructured, and they start issuing the new standards, new series, which is the IFRS series. Right? The full form of IFRS is the International Financial Reporting Standard. And what they are doing, they are deleting the old standard from IS and they are issuing a new standard in the form of IFRS, right? But in Indian scenario, since we are adopting for the first time, so there is no need to maintain the two series, right? Therefore, we maintain a single series, Ind AS 101 and Ind AS 1. That means we have not issued IAS, we have not issued IFRS in India, we have issued Ind AS only, right? They have been sequentially numbered in the same way in which IFRS and Ind AS have been structured and have been prepared. Right, guys? So this is the brief background about Ind AS. This is a brief background about the how the Ind AS have been structured in India. Right now, let's understand that to which company, which corporate Ind AS is applicable. That means we need to understand the roadmap of IFRS. We need to understand the roadmap of Ind AS applicability in Indian scenario. Right, guys? So let's understand that. Okay, guys, let's understand the roadmap of Ind AS, right? Ind AS roadmap. Okay, so in respect of the applicability of roadmap of Ind AS, we have divided the entire economy into three parts. One is the companies, right? Second one is the NBFCs and banks. And third one is the insurance companies. Right? In respect of the companies, MCA has issued a guidelines for the applicability of Ind AS MCA has issued a guidelines for the applicability of Ind AS for the companies, right? For NBFCs and the banks. Since RBI deals with NBFC and bank, so RBI has issued a guidelines for the applicability of Ind AS to the NBFCs and bank. And for insurance companies, since IRDA deals with insurance companies, so IRDA has issued a guidelines for the applicability of Ind AS to the insurance companies. That means as of today's world, only three roadmap have been issued. One is the MCA roadmap, second one is the RBI roadmap, and the third one is the IRDA roadmap. And all these roadmap are applicable only for the companies, NBFCs, banks, and insurance companies respectively. That means apart from this, there is no other roadmap. That means in the today's world, Ind AS is only applicable to these three different sector of the Indian economy, right? That means Ind AS is not applicable to some other entities, right? Let's understand. That means let's also understand that means Ind AS is not applicable. Ind AS is not applicable to which segment? Ind AS is not applicable to which segment? First, partnership firm, partnership firm, or LLP, limited liability, limited liability partnership, right? LLP. What else? It is not applicable to trust. Third, it is not applicable to society, right? It is not applicable to a branch office as well. Ind AS is not applicable to a partnership firm. Ind AS is not applicable to a limited liability partnership. Ind AS is not applicable to a trust. Ind AS is not applicable to a society. Ind AS is not applicable to a branch office as well, right? So Ind AS are not applicable to these different entities in India, right? That means these entities cannot even voluntarily adopt Ind AS, right? That means they have to continue with in order to account for their respective accounting as per the guidance which is mentioned in the respective act, maybe the partnership act, maybe the Indian GAAP or any other applicable GAAP, but not under India. They cannot adopt Ind AS either voluntarily or mandatorily. It's not even applied, right? Now come back to the applicability in respect of the companies, right? When I talk about in respect of the companies, that means we need to understand what is the guidance or what is the roadmap which have been issued by the MCA which is applicable to the companies, right? We need to also understand what is the RBI roadmap which is applicable to the NBFCs and banks, and then we need to understand what is the roadmap issued by IRDA, right guys? So let's understand the guidance or the roadmap which have been issued by the MCA, RBI, and IRDA, right guys? Let's understand this as well. Okay guys, let's understand Companies Act roadmap or MCA roadmap, right? So what the MCA has done, MCA has divided the companies into two phases, phase 1 and phase 2, right? Larger companies falls in phase 1 and mediocre companies falls in phase 2. Now we need to understand what is phase 1. We need to understand what is phase 1. It says any company having a net worth, any company having a net worth of 500 crores of 500 crores or more, right? If any company is having a net worth of 500 crores or more, then that company falls in the phase one and Ind AS is applicable to that company. If any company having a net worth of 500 crores or more, then the Ind AS is applicable to that company in the phase one itself, right? If a company is covered, if a company is covered, it's holding, subsidiary, joint venture, that means JV, and associates, all are covered, right? That means if any company is covered in the phase one, any company having a net worth of 500 crores or more, then that company will get covered under phase one, right? If that company gets covered under phase one, that means its holding, subsidiary, JV, associates, all are covered under phase one only. What does it mean? Let's say there is a company, right? There is a company having a net worth equivalent to, let's say, 520 crores, right? Then what will happen? This company falls in phase one, right? Then its holding company will get covered in the phase one. Then its subsidiary company, this will get covered under phase one. Then its joint venture, it will also get covered under phase one. Then its associate, then it will also get covered under phase one. That means once a company is covered, its holding, its subsidiary, its JV, its associate, all are covered. That means once a company is covered, entire group will get covered by this guidance, by this roadmap applicability, right? The objective is once a company is covered, the entire group should be covered so that the entire group should adopt Ind AS, which is one GAAP for the entire group. It should not be the case that one company in a group is adopting Ind AS, another company is adopting Indian GAAP, and it creates a challenge in the consolidation. So that is the whole objective why this principle have been embedded, that once a company is covered, its holding, subsidiary, JV, associates, all are covered, right? I hope the meaning and the phase one must be clear to you. Also, if a company gets covered in the phase one, then that company has to prepare its accounts for the first year, 31st March 2017, right? If the company gets covered in the phase one, then the company has to prepare its accounts for the year ended for the first time, which is the first Ind AS financial statement for the year ended 31st March 2017, right? We will also understand about first Ind AS financial statement, right? Let me cover the phase two. We will also understand what is the meaning of the net worth. We will also understand what is the meaning of the net worth, right? And we need to also understand what is the meaning of a company. We need to also understand what is the meaning of a company, right? If I talk about a company, right? Let me write here. If I talk about a company, who is a company? Who is a company here? Company can be listed company, right? Company can be unlisted company, right? Unlisted companies can be a private company, right? Or a public company, public unlisted company. If there is a listed companies having a net worth of 500 crores or more, that company is covered under phase one. If there is a private company, if there is a private company having a net worth of 500 crores or more, then it is covered in the phase one. If there is a public unlisted company having a net worth of 500 crores, then it is also covered under phase one, right? Now we need to also understand what do you mean by a listed company, right? Listing. What is the listing company means? Listing means the company can be listed in India or outside India. company can be listed either in India. I hope this is visible. Company can be listed either in India or outside India, right? On a recognized stock exchange. Equity or debt listed, right? Either equity or debt can be listed. What is a listed company? Listed company means a company which has been listed either in India or outside India on any recognized stock exchange, right? It is not necessary that the equity shares are listed only in that stock exchange. It can also possible that the debt of the company can also be listed, right? So coming back to the phase one, any company having a net worth, company means any listed companies, any private company, any unlisted companies having a net worth of 500 crores or more. On which date? On which date? We will also understand which date when we will understand the net worth, right? We will also understand the date. Okay, right? So any company having a net worth of 500 crores or more is covered under phase one, right? If a company is covered, its holdings, subsidiary, JV, associates, all are covered, right? For your understanding, let me also clarify that phase one criteria needs to be tested. These criteria needs to be tested. Net worth criteria to be tested on 31st March 2015 or 31st March 2016, right? 31st March 2015, net worth criteria 31st March 2015 or 16 needs to be checked for the applicability of the phase one companies, right? Okay. Now let's understand the phase two companies. What do you mean by the phase two companies? So for phase one, we have understood that any company having a net worth, of 500 crores or more are covered in the phase one. Let's understand what do you mean by the phase two companies. Okay, phase two companies. So similar to phase one, any company having net worth, right, of 250 crores or more. So any company having a net worth of 250 crores or more will get covered in the phase one. Second, any listed company not covered in phase one. So if there is any listed company which doesn't get covered in the phase one, why that company doesn't get covered in the phase one? Because let's say that the company does not having a net worth of 500 crores or more. Let's say there is a listed company having a net worth of 10 crores, then it will not get covered in the phase one, but it will get covered in the phase two. That means any listed companies which does not get covered in phase one, right? So that means for listed companies, Ind AS is mandatory either in the phase one or in the phase two, right? If let's say there is a listed company having a negative net worth minus 50 crores, even then the Ind AS will get applicable in phase two, right? Third point, if a company is covered, its holding, its subsidiary, its joint venture, its associate, all are covered in phase 2. That means if a company gets covered in phase 2, its holding, its subsidiary, its JV, its associate will get covered in phase 2, right? If the company gets covered in the phase 2, that means company has to prepare its first Ind AS accounts for the year ended 31st March 2018. First Ind AS financial statement, and this company has to prepare first Ind AS financial statement. First Ind AS financial statement for this period, right? So let me summarize what is phase 1 and what is phase 2. So first of all, MC has issued the guidelines or the roadmap for the applicability of Ind AS for the companies, right? They have divided, MC has divided the companies into two phases, phase 1 and phase 2. Phase 1 means the company having a net worth of 500 crores or more will get covered in the phase 1, and on which date this net worth need to be tested. Net worth need to be tested as on 31st March 2015 or 16, right? Right, we will also understand as per which GAAP and as per which financial statement this need to be tested when we will discuss net worth criteria, right? So first of all, Ind AS is applicable to those companies having a net worth of 500 crores or more in phase 1. And if the company get covered in the phase 1, its holding, subsidiary, JV, associates, all are covered, right? Phase 2, any company having a net worth of 250 crores or more will get covered in phase 2, right? And any listed company which does not get covered in phase 1 will automatically get covered in phase 2. That means Ind AS is mandatorily applicable to the listed companies. And if a company gets covered in the phase 2, sorry, then the Ind AS will be applicable in the phase 2, and its holding, subsidiary, JV, associates, all are covered in phase 2 itself. Right, guys? So this is about the MCA roadmap. Right, one more thing, company we have also discussed public listed companies and the unlisted companies. Unlisted companies means private companies or the public unlisted companies. And in respect of the listed companies, any company which has been listed either in India or outside India on any recognized stock exchange. That means it is not necessary that the company need to be listed only in India itself. Company can be listed in India or outside India. Whether equity can be listed or debt can be listed, both are possible, right? So let's understand in respect of the MCA roadmap, if a company gets covered in the phase 1, then what will happen, right? We have said that the company will prepare 31st March 2017 accounts as a first Ind AS financial statement. If a company gets covered in the phase 2, we have said the company will prepare 31st March 2018 accounts for the first time. Now let's understand, if the company gets covered in the phase 1, right, then the company has to prepare 31st March 2017 accounts. Then what all statement company has to give in its first Ind AS financial statement, right? Let's understand that. NBFCs, and this is banks. So for banks, let's discuss for banks. Initially, the Ind AS has been made mandatorily for the banks 31st March 2018, right? Initially, this has been made mandatory not for 31st March 2018, 31st March 2019, right? But subsequently, this has been deferred to 31st March 2020. But again, RBI has issued a guidance that Ind AS will be deferred in respect of the banks till the further notification issued by RBI in respect of the applicability on banks. So till now, Ind AS is not applicable. Ind AS is currently not applicable, right? So on banks, Ind AS are not currently applicable. But for NBFCs, again, it is divided into two phases, phase 1 and phase 2, right? This is similar to Companies Act roadmap. This is similar to Companies Act Roadmap, that any NBFC is having a net worth of 500 crores or more, right? Any company having a net worth of 500 crores or more. If a company, if an NBFC is covered, its holding, its subsidiary, its JV and associates all are covered. So if the company gets covered, if the NBFC gets covered, they have to prepare first Ind AS financial statement for 31st March 2019. What is this? First Ind AS financial statement, right? Again, that will be again for 3 period: 31st March 2019, comparative 31st March 2018, and opening is 1st April 2017, right? That the company has to prepare. And in respect of the phase 2, any company, or I would say any NBFCs having a net worth of 250 crores or more, but less than 500 crores, right? Any listed NBFCs not covered in phase 2. It will also get covered, not covered in phase 1. It will also get covered in phase 2. And the third one is holding, subsidiary, JV, associate, all are covered in phase 2, right? And what is the first period? First Ind AS accounts is 31st March 2020 will be the first Ind AS accounts. 31st March, first Ind AS financial statement, right? Right. I will also let you know what is the period for the insurance companies. Insurance companies, right? There are no phases, right? They have to prepare 31st March 2021 Ind AS accounts, right? There are no phases. All insurance companies are covered, right? For the RBI, roadmap, NBFCs and banks, right? For banks, it is not applicable as of now. For bank, it is not applicable as of now. For phase 1, any net worth having a net worth of 500 crores or more, it is covered in phase 2. And any holding, subsidiary, JV, associates, all are covered. For phase 2, the net worth of 250 crores or more, but less than 500 crores, any listed NBFCs not covered in the phase 1 will get covered in the phase 2. And holding, subsidiary, JV, associates, all are covered. For insurance companies, there is no phases. All insurance companies will covered in the same phase. And first Ind AS financial statement will need to be prepared 31st March 2021. That means with a comparative of 31st March 2020 and opening date is 1st April 2019. That is the current scenario and applicability criteria of Ind AS in India in respect of companies, in respect of NBFCs and bank, and in respect of the insurance companies. Right, guys? Okay, guys, let's understand the net worth criteria, right? What is net worth? Let's understand the net worth first, right? Which standards provides me the guidance of what is a net worth, right? There is no standard which provides me the guidance of the net worth. It is a Companies Act, Section 2, subsection 57 of Companies Act provides me the guidance that what is a net worth, right? Let's understand that. It says share capital, right? Share capital plus total reserve and surplus. Total reserve and surplus, right? Excluding revaluation reserve, correct? Then excluding amalgamation reserve, right? And any miscellaneous expenditure not written off, that needs to be excluded, and this is how we need to compute the net worth, right? It is not defined under any standard. The net worth criteria is to be defined as per the section 2 subsection 57 of the Companies Act. I need to include share capital, I need to include total reserve and surplus, I need to exclude revaluation reserve, amalgamation reserve needs to be excluded, and any miscellaneous expenditure which has not been written off needs to be excluded. Only then I will get the net worth criteria, right? Some important points, some important points for net worth, right? First of all, net worth criteria to be computed, net worth to be computed as per Indian GAAP latest audited financial statement, right? Second is net worth to be computed as per standalone financial statement and not as per consolidated financial statement. Consolidated financial statement. Net worth to be computed as per the Indian GAAP, right? Indian GAAP. People get confused. Sir, whether I need to compute the net worth as per Ind AS or should I compute the net worth as per Indian GAAP? Answer is very clear. Net worth needs to be computed for the purpose of applicability of Ind AS as per Indian GAAP only. I will not apply Ind AS first. I will not compute the balance sheet. I will not prepare the balance sheet of Ind AS first and then check whether Ind AS is applicable or not, right? So applicability criteria of Ind AS is need to be checked as per the Indian GAAP latest audited financial statement, right? Once a net worth criteria meets, right, either in phase 1 or 2, Ind AS will be applicable in the very next year, right? And fourth point is once Ind AS adopted, right, the same needs to be the same gap needs to be continued in future. Once Ind AS has been adopted, the same gap needs to be continued in the future, right? That means there is no option to go back. Once Ind AS has been adopted, it has been adopted for the future. The company do not have any option to go back and come and adopt Indian GAAP, right? Secondly, companies companies can voluntarily adopt Ind AS, right? But NBFCs and bank cannot adopt Ind AS voluntarily, right? So this we have discussed. Second is net worth to be computed as per the standalone financial statement and not as per the consol financial statement. So the net worth criteria is to be computed only as per the audited financial statement as per the standalone entity, not as per the consol financial statement, right? So company has to compute the net worth only as per the standalone and not as per the consol, right? Once the net worth criteria meets, right, Ind AS will be applicable in the very next year. Once Ind AS criteria has been met, let's say 31st March 2020, the net worth of a company is 255 crores. That means the phase 2 criteria met. Then the Ind AS will get applicable in the year ended 31st March 2021. Then the company has to prepare Ind AS accounts for the year ended 31st March 21 with a comparative 31st March 2020 and with the opening date 1st April 2019. So once a net worth criteria meets, Ind AS will get applicable. Ind AS will get applicable in the very next year, right? Once Ind AS adopted, the same gap needs to be continued in the future, right? That means I do not have the option to go back and adopt Indian GAAP. Once adopted, it has been adopted in the future. Companies can adopt voluntarily, companies can voluntarily adopt Ind AS. That means there is an option for the company that can also adopt voluntarily. Let's say the company having a net worth of 10 crore rupees as of March 31st March 2020. That means Ind AS is not applicable to that company. But even then, if the company voluntarily wants, they can adopt Ind AS. But that is not applicable in case of NBFCs, banks, and insurance companies. They cannot adopt Ind AS voluntarily. They have to adopt Ind AS only as per the guidelines, only as per the roadmap which have been issued by RBI and IRDA respectively. Right. So these are the critical factors which we need to consider in order to evaluate the applicability criteria, guys. Right. So let me conclude. For the phase 1 companies, 31st March 17 was the first accounting period. For phase 2 companies, 31st March 2018 was the first accounting period. Net worth criteria is 500 crores or more, and phase 2 companies is 250 crores or more but less than 500 crores. Any listed companies which is not covered in the phase 1 will get covered in the phase 2, and any holding subsidiary JV associates of the respective companies will get covered in the respective phases. For the banks, it's not applicable. For the NBFCs, again, phase 1, phase 2 criteria, the same principles of which we are having for the companies. For insurance companies, it's not applicable. It's applicable for the year ended 31st March 2021. They cannot voluntarily adopt Ind AS. Net worth, it's not defined under any standard. It is defined under Companies Act Section 2, subsection 57. 4 items: share capital, reserve and surplus. Remember, this is the total reserve and surplus. Total means security premium, capital redemption reserve, any other reserve which falls under reserve and surplus, that will be covered. After that, I need to exclude revaluation reserve. After that, I need to exclude amalgamation reserve. And after that, I need to exclude miscellaneous expenditure which has not been written off. Right, guys? Okay, guys, let's take a couple of the practical example in order to apply the Ind AS criteria, right? Okay, let's say this is the NBFC. NBFC is having a net worth of 580 crores as on 31st March 2016, right? This NBFC is having a subsidiary 1, subsidiary 2, and it is a company, not NBFCs. It is a company, right? Net worth is equal to, let's say, 520 crores as on 31st March 2016, and the net worth is equal to 480 crores as of 31st March 2016, right? So this is the case study, right? So in this case, this company, right, S1 will get covered in phase 2. This will get covered, this will get covered in phase 1, right? This will get covered in phase 2 because this company is having a net worth of 480 crores. So for SFS, they will adopt Ind AS, right? For SFS, they will adopt Ind AS, right? This is applicable 31st March 2018, and this is 31st March 2017, correct? But for NBFCs, right, what we have said, they cannot adopt Ind AS voluntarily. They have to follow RBI roadmap. So Ind AS is applicable for the year ended 31st March 2019, right? So that means for SFS, they have to follow Indian GAAP till 31st March 2018, and they have to prepare consolidated financial statement under Indian GAAP only till 31st March 2018. And similarly, for the subsidiary 1 and subsidiary 2, they have to provide Indian GAAP numbers as well to the NBFCs for preparing or facilitating the consolidated financial statement. Right? This is a good case study, guys, where the company has to follow MCA roadmap. Right? This is a company, this is also a company, so they have to follow MCA roadmap. But this is a NBFC. This NBFC has to follow RBI roadmap. Right? So this is a case study or a comprehensive case study where we have the NBFCs and where we have the companies as well. Let me put one small case study, right? There is a ABC company having a net worth of minus 20 crores, right? As of 31st March 2017. And this company is a listed company. Now in this case, this will covered under Ind AS phase 2. Right? Because what is phase 2? Any listed company which is not covered in phase 1 will get covered in phase 2, guys. Right?